Hey, what's up, guys? This is Omar from Trinity Trading Partners. Wanted to talk about a trade we took last week on Goldman Sachs here. So what I'm showing is a 15-minute chart of GS. This is the Monday open, so it's sort of the price action all week. Eventually, actually, really went nowhere, but had some nice volatility in general. So Uh, Goldman Sachs, Monday didn't really do much, but Tuesday it actually broke out. This was an all-time high. It broke out, had a really nice sort of open drive here, the first 30 minutes, first 45 minutes into the open. And then it had a really strong reversal. And at the same time, SPX was also having a pretty decent reversal too at all-time highs. And one setup we look for when this happens is a fake breakout. So, the idea is GS breaks over all-time high and then actually comes back under the all-time high within the same session, or even the next session later. Um, this usually leads to further downside move before fresh buyers come in. And so this is a setup we look for. And so we're watching this Tuesday. It broke back under the all-time high, had a pretty nice drive lower here, about 6 points, and then it was consolidating for about an hour. And so we entered puts here on a new low a day, looking for a continuation back, under 800 into this like 798 area. And what happened was it was a nice little liquidity grab at low of day, and we sort of bounced a little bit higher into the close. It wasn't a crazy rip or anything, and we still closed under the all-time high, which was still good for the downside. The following session, we kind of popped over, reversed immediately within the first 30 minutes, and then we sold off back under 800, where eventually we took profit on the trade right around here, and then the next session we actually gapped lower, and then these puts paid pretty well. They paid about 150% at the lows here from our entry. Um, so, when I talk about that in hindsight, when the markets aren't open, it sounds like a great trade, right? Um, it worked to our expectations, and we got paid on it. However, why I want to talk about this trade is the premium movement when we entered was pretty awful and a little bit painful, I'm sure, for some of the people who took this trade. Um, so I've got the premium chart here. I'm gonna just blow it up. Um, so we entered at 0.95 on this candle, and basically what happened was, we actually got a nice move up to like almost 1.2, about 20%, nothing crazy. And then we actually, once that GS bounced into the close, uh, the bounce itself wasn't terrible, but um, the premium movement, so the bounce wasn't terrible on the stock, but the premium movement on the option was really, really bad. So we actually closed this option on the day around zero point 0.5. So 0.95 to zero point 0.5, 45% drawdown on the option. And granted, it was within an hour or two. And then the following day on the gap up, it actually opened near zero point 0.3, so about 60% drawdown, 60 to 70% drawdown at the very lowest. Um, so that's hard to hold through, right? Minus 60% on anything is hard, right? And if you're an experienced option trader, that's entirely possible, especially trading weeklies. You can see that kind of drawdown instantly, right? Um, so I want to talk about like there's like two strategies to combat, this sort of frustrating movement. And the first one is not a strategy I actually use, but a lot of options traders live by it, and it's this idea of expect zero, um, meaning uh, you know the way the what makes options great is you can put your entire risk up front and allow it to go to zero and allow the whole trade to sort of follow through with the idea that you can hit 100, 200, 300, 400% on an option. Um, so that's one strategy. For smaller accounts, for people who are like really trying to grow their wealth and grow their account, from a smaller sum like 5, 10 grand, even 50 grand, and you're trying to make it, turn into a million plus, that expect zero is going to work. Um, but it's going to take many years, right? It's going to take a decade. Um, what um, as a small account or 50K and under, you do need to take bigger shots and risk more than 1% of your account to really grow it. And so that's I think where the majority of traders, at least that I interact with, are at. Um, and that's where I'm at too. I'm still in a heavy growth stage. I haven't hit 8, 9 figures or whatever uh, in my trading profits, and that's where I aspire to be. And so I have to take on higher risk as a result. So um, the way I approach these kind of trades is um, I size normal, like you typically do. And if I start to see some premium movement like this, where it's like, okay, premiums are like literally dying in front of me, I will go ahead. Um, sorry, the premiums are dying, but the setup is still very valid. I will go ahead and just size lower. So I'll take off some size so that I can see the trade through without having the stress of like, losing a lot of money. Um, and then as the trade comes back into my favor, I will re-add that size. So the way you can approach this is like, so you enter at 0.95, it starts hitting like zero point 0.8, 0.75, zero point 0.7, maybe around 0.65 or zero point 0.7, you're just like, okay, let me just size down here and let me revisit this trade later. Especially, you're hitting the close too. So maybe you take off half your size, quarter of your size, three-quarters of your size, whatever you like, whatever makes you feel comfortable with the overnight risk. And then the next day, you know, Goldman Sachs has that nice reversal in the morning. The premiums start, eventually start to sort of pop here. And you can add your size in back where you sold it, right? So like if you sold it at zero point 0.6, add it back in at zero point 0.6. If you sold it at zero point 0.8 or, 0.7, zero point 0.8, add it back in 0.7, zero point 0.8, right? Or you can even get cheaper, zero point 0.6. And then ride the intraday move lower. Um, that's how I approach these kinds of trades. It gives me peace of mind to know that I don't have heavy amount of risk in a trade that doesn't seem like it's working. Especially if you're, we do momentum trading, so if a trade doesn't work right away, that's usually a red flag for us because we enter at um, sort of extreme points. We entered at low of day, right? Because we're expecting the stock to go even lower. Um, we, you know, buy high, sell higher, sell low, uh, buy back lower, right? Um, that's our whole strategy is momentum trading. Um, so if something's not working right away, that's usually a red flag, and that tells me, hey, maybe I need to size down on this trade and revisit it later, right? Um, so that's kind of my approach. I think that's a lot of good traders will they manage their risk first and then revisit the setup. But yeah, this is a tough one to hold through. I ended up being one of our better trades actually this week. Hit 150%, right? If you held through the overnight into Thursday, where SPX gapped down as well. So hopefully this was helpful. These kind of nuances in trading, I always try to talk a little bit more because you don't get that just from the chart, right? I went over the chart to start and it seemed very normal, right? It seemed pretty easy trade to hold through, right? It's just, literally has been down since it hit this all-time high, right? Straight down, couple bounces here and there. But when you're in it and you have risk on, it's completely different, right? Um, So hopefully this is helpful. Um, yeah, and it's Sunday. I'm getting ready for the week. Hopefully we have a good week. Best of luck, and yeah, if you have any questions, if you're in our Discord, feel free to reach out to me. Happy to answer anything. All right, take care.